Good morning. Today is October 27th. It's 10 after 9 a.m. We're looking at the monthly chart of the ES December contract. And these bars are all formed by the pit session. We have re-entered this 5 to 7 month trading range up here and have found acceptance thus far. We are likely going to start one-time framing up on a monthly basis in a couple of days, or into next week, so we'll see. We have not cleared the MR2 at 78, so that would be resistance going into the coming days. All right, now looking at a weekly. The weekly chart, we are, as you can see, into this this balance area, and have cleared the 50 moving average. The 20 is still below it. Like to see that get above it for more acceleration to the upside. Currently, this week, being Tuesday, is the start of the FOMC meeting. Announcement will be tomorrow afternoon. It's been a quiet day yesterday, the smallest day in several days. We'll talk about that more in a minute, but we are just balancing right now on the weekly. We are still inside last week's range, but still inside this trading range. So it is at the moment paused but bullish. We've got a three soldiers pattern that we're sort of holding at the moment, which is bullish. On the daily chart, we have cleared the 200 moving average, which is starting to rise just slightly. We gapped up on Friday, and we've held that gap into yesterday, but yesterday was a balancing day within Friday's range, which ended up to be a pause and decision day. Again, this is likely because a big news announcement like the FOMC on Tuesday, there's less volume. People are less likely to participate coming into the announcement, and that actually could bode well for an explosive day either today or tomorrow, probably tomorrow. But we may get some good trade today, maybe to the downside as people take profits coming into the FOMC. We have been one-time framing up. Currently, if we open right now, we would have broken one-time framing. We're opening in 15 minutes. It's likely that we will stop one-time framing today, which means we might, if we don't find solid support at this gap, we will probably have an attempt to close it. Balance rules are in play, meaning that we have broken outside of this two-day balance range and are looking to fill this gap. There's a spike on this day, so once we're into that range, kind of looking for spike rules. Are we going to get acceptance below the base of the spike or not? We would be looking for value to get to unchanged as it repairs much of this up move here. I would be looking on the downside for support around 42.50 based on the 200 moving average. So, and there's also the bottom of this trading range, this balance area here at 20.38, and above that, the weekly moving average is at 40.25. So you've got some things holding it up here, likely, unless there's some serious liquidation. I'm not expecting that, but anything can happen. So that's looking at the daily. Moving to the profile. Okay, we can see that the overnight inventory has largely been rotational, migrating just below yesterday's range, and only in the last half an hour or last hour we've broken below the two-day balance. So it is starting to one-time frame down, and although we could get a correction of the overnight inventory towards the volume point of control, which is very wide here, and we do have a floor high yesterday. At this point, we've broken out of balance, so balance rules would be in play. And if we stay out of balance, then we're looking at some initiating activity to the downside. I'm going to take the overnight off to get a little bit better view here. All right, you can see that we have a gap here from 56.75 where the overnight low is. Actually, well, it's where it was. Sorry, it's actually a little lower now. We have a gap here down to 53.50 that we would want to see filled, and then where I have this line at 48.75, this is the base of the spike. So if we do repair some of these single prints, we're going to look for a possible bounce here at 50.75 where there's a high volume node, another possible bounce here at 50 where there's a low volume node, and if we get through those easy as pie, that means there's some serious liquidation going down or some serious selling to just plow right through those. So if we don't get any kind of a bounce at all at those nodes. And then we'll see what happens, take it one step at a time. If we are able to penetrate the base of the spike, relatively quickly. We should be repairing at least the VPOC and the POC here. If we can't get any more penetration to the downside, getting below this N low right here, let me split this out. I'd like to see us get below this N low to actually target the S3. The S3 is kind of far away. At that point, I'd be looking to be a buyer for a later rally. I don't know, again, this falls in with some of the support levels we talked about. The weekly moving average is at 40 quarter. The 200 moving average on the daily is at 42. So I would expect some kind of bounce here, and then possibly a rally back out. Again, that's one scenario. So again, if we open right now outside of range, it looks like we will. It's a breakout of balance, and it's a gap down, and looking for gap rules to be in play. If we can't get back to get back inside yesterday's range, or I would start with this 2-day balance. If we can't get back in this 2-day balance and get all the way value to unchanged, we're going to look for later liquidation. Very possible we'll get a wider rotational day between inside of this balance and the spike and the POC here. So could see some rotation within here today. Again, I would be surprised at a liquidation break that comes back and takes back that up move all the way down into this 4-day balance area. I would be very surprised at that. I think that's least likely to happen. I think highest odds are that we have a test to the downside and a test to the upside, and basically rotate within that area right here, maybe backfill it a little bit. So just take it one thing at a time. All right, that's the ES for this morning. Oh, one of the other things I wanted to mention, yesterday was the smallest day in many days, the smallest trading range that we've had. I did not count the days, but it's been the smallest day in the last 7 to 8 days, which means that if we were to open in range, one way to play it would be to take a breakout above and breakout below, and be ready at the open to be filled on either end, and then the one you weren't filled on to be the protective stop. But that's not a trade for me. It's not an intraday trade for me. It's that's too big a risk. That's 8 points on yesterday. Of course, you can put your stop wherever you wanted to, but that's how to really trade that. And since we're very likely in 9 minutes to open slight gap down, that would be some initiating activity. And what I would look for on any move here is opening range trade. So we're outside of value to the downside. I would look for a stop below the opening range, depending how wide it is. If it's within my risk tolerance, I might look for a way to get on board to the downside, either coming back into the gap or the opening range, the low of the opening range. So see what happens. And I do want to real quickly see what this 55.75 line was. I don't remember what that came from. Should have labeled it. Okay, this high way back here. I'm going to remove that. I don't think it's very relevant at the moment. Okay, have a good day.